Well, I think volatility in the markets is relatively low, and that definitely makes me wary, particularly in light of the uncertainties in the global environment. I'm not the only one expressing these uncertainties. Central bankers around the world are very much worried about how some of the trade tensions and other factors could really unfold, including Brexit and different scenarios. So I think the fact that volatility is so low, particularly in the month of August, really raises some red flags. I mean, there's been previous Augusts which had very big end of month breakouts. I'm not saying that this month we'll see that, but the risks are there because headlines could go either way over the next couple of weeks. So I do not believe, Dom, that this is a representation of the stability going forward. I think that this definitely raises more red flags than anything else.
The VIX below 11 is one thing. Let's take a look at other parts of the market that you're watching for signs of a possible hot August. Could it be in the currency markets? Could it be in the fixed income markets? Where are you looking for signs of volatility elsewhere outside of the U.S. stock market?
Well, it's a little bit of both. These days we have to watch the Chinese yuan very, very carefully and what the Chinese government's doing. Previously, they took some measures to, perhaps reduce the volatility as well as the weakness of the yuan. But today we're seeing the yuan continue to weaken. So I think, you got to watch that carefully because that's affecting all of the markets. And then Japanese bond yields. I mean, Japanese bond yields have been quite firm. And I think if we see any sharp jump in JGB yields, that could also affect currencies as well as equities as markets look to see what those central banks will do next.
Central banks are a key part of this equation. Is there a view on your side of things, Kathy, about which central bank is going to have the most impact on the markets in the coming months? Is it going to be the Fed? Is it going to be the ECB? Is it going to be the BOJ, the BOE? Which one are you watching the closest for signs that it could be a market catalyst for everything on the macro side of things?
Well, I think the Federal Reserve is the only major central bank expected to adjust rates in September. We have the possibility of a rate hike from the Bank of Canada before the end of the year, but everyone else, I think, is just happy with where things are. We had some big meetings earlier this month; they've come to pass. We did not see that cause a significant increase in volatility. So the question is really not only what the Fed will do in September, which is certainly a rate hike, but what comes next. And so that's why the FOMC meeting will be the biggest event next month.
All right, we are seeing some pound weakness this morning. Right now, you're seeing a look at U.S. Treasury yields right now. The 10-year note yield, again, kind of moving to the downside there. The pound, though, $1.2902. Presumably, this is something to do with Brexit, maybe some fears kind of percolating again. What can we expect from England, the UK, with regard to those talks? Can we continue to see that pound weakness play out because of Brexit fears?
Unfortunately, I think so. They raised interest rates this month, and they're not expected to do anything else this year in terms of monetary policy, and so that's allowed those Brexit concerns to return. Mark Carney, the central bank governor, came out and said the risk of a no-deal Brexit is growing. We're hearing a lot of that chatter from UK policymakers, and I think they're kind of laying the groundwork for the possibility of the talks extending beyond March 2019. And I think investors and business investment is really being negatively affected as a result of that. So you're seeing sterling, trade pretty much right around 129. I think, there's probably going to be a bit more weakness until we get some good news. And I don't foresee any good news in the future. With that in mind, though, sterling weakness is certainly good for the economy. It's good for inflation. So, we definitely have to keep an eye on the data set and government central bank comments if the Brexit headlines improve.